shareholder management, shareholder communication, or better yet, should we be using the word shareholder? In some cases, we're hearing the words like, community builders or brand ambassadors. We have companies like Brewdog Breweries who call them equity punks. We have others that call them legionnaires, worthies. We're calling them the gladiators. And I wanted you guys to meet Maximus. Yes, Maximus, the ultimate gladiator in Roman times, but I'm not sure if he's going to wake up for me right now, but as soon as I find him, I'll bring him to you. But the discussion is really around these two exciting topics that are intertwined with each other. Managing whatever you may want to call them, and then communicating them is the same. They're tied in, and more importantly, you need professionals when you haven't done it before as to what it is that you communicate with everyone. I mean, I'll give some examples of that. So today I'm joined by two panelists. If you haven't met them before, Andrew Korn, founder, CEO of E5M, and of course, Eric Fischgrund, again, CEO and co-founder or founder, sorry, of FischTank PR. So obviously we're talking to people that you've heard throughout the day. They have experience with Regulation A. I'm bringing this information back to the industry because we're hearing it from the other side. We have a very fortunate part at KoreConX is that we're listening to all the different audiences, and we're taking notes, and we're hearing what they're saying. And we also know that so much great work that gets done on one end. So here's the most common feedback we get from shareholders afterwards. I heard so much from the company when we were raising the money. After they got the money, it's like they died. Where do they go? So we're going to start with there. So let's start with the shareholder communications component of it, and then we'll move into the management of it. So obviously, Eric, from being a PR, has your firm been engaged on the post-transaction element of a company where you're guiding them, providing them tips and guidance on what should be messaged out to the holders and creating a plan for it?
Yeah, absolutely. Those are the engagements that we certainly enjoy working on. I think just to take a quick step back, my agency FischTank works with works on a number of equity crowdfunding deals, and we really have since they became prevalent in 2015, 2016. The majority of our clients are not relegated solely to equity crowdfunding, and so we're used to clients who are doing private raises or who are listing on major exchanges, NASDAQ and New York Stock Exchange, or of course doing equity crowdfunding, which is what we're here to talk about. So we're always looking at a long-term vision. So yes, it's very important to execute properly an equity crowdfunding campaign, and I'm sure everyone is relatively exhausted from hearing about all the positive parts of that today, the challenges and the positive parts. But I do think it's very important to have a plan afterwards, because if you think that individuals are going to invest hundreds or thousands or tens of thousands or hundreds of thousands of dollars, which has happened, and then just sort of expect returns in 3 or 4 or 5 years, and that you'll just be silently at work, then you're mistaken. They need to see consistent and continuous corporate communications. What does that mean? It means continued press releases. It means shareholder newsletters. It means blog posts. It means continuing to speak to journalists about your business, not about raising capital, but about your business. How are you moving your business forward, right? Like, I don't want to hear a company talk about raising money all the time versus talking about their business, because it means that they might not have a very active business plan, or might not have the right business development people, or like a revenue producing model. So it's extremely important. We work with a lot of companies that are leading up to and then executing an offering, and we do try to make the point very clear that your investors, to your words, Oscar, they're not going to go away. They expect continued communication, and I think that's what the role of myself and my firm and other firms in the space and individuals in the space are doing right now.
That's great. And obviously, Andrew, your firm is not a PR firm, but you work with PR firms. So how does that combination work if you're trying to be there during the race of companies and then knowing what we know now, that the amount of marketing communication continues. So it doesn't stop. In fact, it needs to continue for a period of time. And to, I think Eric said it best. I don't want to hear that you're just raising money. I don't want you to come out of the closet and say, I need money again. And then for the whole 2 years, you disappeared, or you only send out quarterly statements, which meant nothing to this crowd. So how do you strategize towards that with them?
So the key word, so let's start with my firm and my prior firm have been involved in investor relations forever. And that's essentially what a lot of this turns into. And I think the key word that Eric used is the word plan. So you need a plan of how you're going to communicate, and then you need a strategy, then you need the specific tactics and execute. And if it sounds like a bunch of work, it is a bunch of work, but hopefully it doesn't feel like work. You know, we call it equity crowdfunding. When does that crowd turn into a mob? And they turn into a mob when you don't communicate and you don't do things right. You know, when we onboard a new client, one of the things we ask, what is the basic promise you're making to shareholders? And part of that is that they're along for some of the journey. You know, when you're raising the money, it's, hey, we got a new milestone met. So let's get over to Eric's team and let's get that out to the press, and let's go over to Andy's team. Let's get that on the offering page, and let's get an update out to prospects, etc. So you don't have to be quite as diligent, but you need to be very diligent in the way of communicating. And let's say it only is quarterly, then it is, here's the milestones we've met that we told you about. Here's the ones we haven't met that we've told you about. Here's what we're doing to meet them. Here's where we are financially, and communicate to them. My recommendation is like you're a public company, and you can do it more often than quarterly. I think the off-calendar communications are really healthy. You know, you've used the word a bunch of times today, community. The more they feel like they're part of the journey and still part of the community, the more they actually are. And if you want them as advocates and, you know, influencers for you, all of these things are contributors to it. So it's that plan, strategy, tactics, execute, and, you know, have a firm like FischTank and some other fine firms out there to make sure that it's being done. And one last thing, and I'll turn it back to you, is, you know, people will say to me, wait, the math you just gave me, we're raising 15 million. You believe the median's going to be $2,000 each. How many thousand investors is that? And all the time I'll laugh and say, you damn well better get yourself a really good transfer agent, because you're going to need things distributed, and it's not just money and shares. So
yeah, and we'll talk about the management, because that's never been part of. But I'm gonna throw a snag in here, because I come from the public markets as well. Myself, Jason Futko, we spent you know, quite a bit of time in that area, over a decade. And I got to tell you, what I saw it just stunned me. Being an entrepreneur of a technology company, always, you know, having to grind ourselves to get to the next capital raise. These guys would go to their brokers, ask for their $5 million. They wouldn't even know who the shareholders are. They didn't care. Take the thing public, list it, and one day they're gold, the next thing they're plutonium, silver, and money just washes away. And what I saw, there was a cottage industry called investor relations. And I got to see this industry. It still exists, by the way, and I'm sure it maybe not so prevalent. It's huge, and for public companies. And I find it very distasteful. There are two sides. There's where you can hire an Eric FischTank inside your company, or it's a member of your team. He is being rewarded like every other member in your team, not so much to drive your price from a nickel to 50 cents, or for 50 cents to $1, but to truly be a community builder. You know, when I look at BrewDog and I look at Legion M and many others, they're not the only two. In particular, in the private world, I see that they're seeing their shareholders more than just shareholders. And you said it right, community. And I think it requires a new form of industry coming in and if anybody's listening out there, we need this. Companies are not prepared for this. They do not have this individual. If you have the investor relations skill, great, that you understand the legalities. But where it's different here is this. When Eric FischTank invested in KoreConX, which I know he will, and Andrew Korn, which I know he has, and they sit on my cap table. I can't walk away from it. I cannot pretend that they're not there. I cannot pretend that they don't exist. I can't say, oh, they're hiding under a shelf. No, in private world, we see exactly the holder, whether it's an individual, an entity, an IRA, under trust, it doesn't matter. You see it. It's real time on your cap table. And with a platform providing that, it's there. So that relationship is so important. And you need somebody who can guide you and work with Eric, Firm, and Andrew. But I'm just not sure if I would want to call it IR. I've been struggling with this for a while. In fact, we had a feature in our platform named IR. We renamed it because I was getting to the point that I don't want to mislead anyone that this is like publicly listed world. And that was maybe like anything else, we're entering a new industry where I used the word ambassadors. I know, Andrew, you said maybe that's not appropriate in this case. It's true. So that would be my only comment to this. But this by no means does it mean that you don't need the professionals. You just need to understand that the relationship, I believe, with a company is so different, and the holders, and it can be so empowering. And you cannot just stop the minute you finish raising your capital. That's the biggest mistake I've seen. So what I'm seeing now, that's exactly, they go, Eric, I don't need you anymore. It's, in fact, I would go, what are you doing? You need Eric more than ever. I don't need you anymore, Andrew. I don't need you to keep, the messaging may be different, but I still need you, that consistency, right? They're expecting it. All of a sudden it disappears, and it's sort of like, what happened to my investment? Is the company still there? So, I mean, imagine when shareholders are asking, is the company still there? That's a scary question to be asking after you've invested with it.
It's very scary. And frankly, my firm leaves its retainer the moment the money is raised, where Eric should be forever. Very frankly, and then we're brought in for, as mercenaries to help perform very specific communications, and build certain things as they need to get built. But when you look at the dispersion of types of issuers, and then also dispersion of types of investors, there is the investor that never wants to hear from you, and they just want to check when they're going to get a check. And it depends. Are they expecting monthly yield, quarterly yield? Are they going to get a dividend? Or, gee, I got an option on tech firms, and one day I'm going to get a very big check, or never, or they're going to go out. But the more you can engage them, and the more they are still part of your community, the better off you're going to be. And that's something that, again, with a good plan, is executable. I don't believe a private company needs to bring someone in-house when you can outsource that for far less money to a good firm like Eric's. I did an interview a couple of weeks ago on what hedge funds are doing during coronavirus. And the good ones are figuring out the way people want to be communicated to, and then communicating to them that way. In the case of a Reg A, and you've got a transfer agent, you already know how they want to be communicated to through the transfer agent. And then also, then how will someone like Eric or someone like our firm then package things to go out to them? And that I'd love to toss over to Eric of, what are the ways that is kind of done?
Yeah, and obviously thank you both, and I think that one thing that Andy touched on right away, and that Oscar elaborated on, is community. And I think that one thing that people get so focused on is, again, the messaging for raising capital, investor acquisition, and then they don't always think beyond that, or even during a capital raise. They're so focused on getting new eyeballs and new traffic, which obviously is important on their offering and on their website. Sometimes your community, your current investors, can be your best source of continued interest. we've participated in campaigns where the entire crux of it is, an email campaign asking them to forward to one friend. Show one friend this video of of me doing some like online TV, or show one friend this Forbes article, or show one friend this email. We've hit yet another milestone. Share it with someone. You can apply that same thinking to social media as well, right? Like, yes, it's important to get new eyeballs and you're, following the brand on LinkedIn or Twitter or in a Facebook page. One of you mentioned right away the BrewDog offering and the punks, right? Like, that's a perfect description for how you're able to like really create some brand identity and brand ambassadors. And I'm seeing more and more issuers coming into the space, and they understand that, yes, like, I can raise capital successfully using equity crowdfunding, but also I can really create some brand affinity, for ourselves and some customers, right? And a lot of my clients at FischTank are very technology or healthcare or emerging industries focused. But however, I've seen like the brewery, BrewDog, obviously that's a good example. I don't know if anyone remembers a few years ago on Start Engine, there was the like surfboard golf cart thing where. If anyone's paying attention, I love the way that was marketed. We didn't do that. I thought it was great. There was a lot of engagement. I actually have no idea what happened to that offering, so I should be careful before talking about the marketing of it. But the way that they built their community, I thought was a really good idea. And I've seen that with companies that are more like, more biotech, more technical, more corporate in nature, and it can still be very effective, because when people are confident in the company they invested in, they feel good about an investment. They do the same thing they do with traditional equities. They tell friends, they tell family. So I think the community building, which is really what I wanted to add to what both of you said, is just incredibly effective. And Andy's, you have so much experience in the middle of in the middle of an equity crowdfunding campaign. There we go, late in the day. If you want to add any of the ways that you're able to do it from your side, I think that would be helpful as well, since so much of what we do is press and organic content driven.
Sure. Well, first you should pour one of these, because there's nothing like 12-year-old scotch at 6:30 at night on the East Coast. So it is well past 5. So Eric and I are actually working on a client where we're looking and building into the cost per acquisition per investor a downloading of their app. So how do you make that app go viral? And that is part of what he and I are working on for the prep of that offering. But once they have 4,000 to 8,000 investors, how are they going to turn them into ambassadors and get them to get someone who they live with and a friend and a colleague, kind of those 1, 2, 3, to also download the app? So, that's part of, and it's an interesting thing when, you talk about budgeting. It's what does it cost to acquire someone new to download your app? And how is that built into that budget? So that is a very typical thing. So there are webcasts, there are podcasts, there are vlogs, and it's all the normal things you would do for PR. It's just you are not forgetting your audience of the people who own a nice chunk of your company and who will help get you to where you are at that moment in time. So
it's a great tie into what I wanted to give you another thing to think about, which is, so I invested in BrewDog. BrewDog treats me well, calls me an equity pawn. I am weekly engaged, daily engaged. They give me all the tools. In fact, I'm so happy. I go everywhere and I get more people to invest. Then I invested in another RegA Plus company, and now it's gone quiet. And so we're now, what is important for everybody to know, for the audience, is to, when you raise money, the likelihood that that investor has invested in another offering through the same path is very high. It's around 40% that that individual will invest. And if it's in an online platform, it's like 80, 90% that you'll you'll be getting, and there's an expectation. So if one does it, the holder is expecting it. And the more reason, I keep coming back to this because it's the one thing that I think is lacking. I don't know if people are missing it. I don't think they're missing it anymore. And you're right, it has so many different impacts on growing your business, forgetting that you don't call them shareholders. I remember when I first started as an entrepreneur, you thought it was a shareholder and you go, ugh, you get the money, but it shouldn't be that way, right? I got 48 great shareholders today in our company. Now, I love them to death because they believed in us. If I could get them to go to LinkedIn and tell somebody that they invested 150,000, it'd be great because you know how quickly it would be but you can't. But it's amazing how this investor who only put in $100 would go out there, Facebook, LinkedIn, and Twitter, Instagram, every social channel, and let everybody know that they own a share and they only invested $100. It's an amazing impact, same type of investor, and you'll get more out of it. So that nurturing, that strategy that goes in, I think it needs to be as thought out as it is when the capital raise is being done, and people need to budget for it. Budget for it, meaning maybe you need to hire somebody in on a part-time basis, or maybe you need to work with an outside party and somebody in-house, because it does require, you need to answer questions daily, and obviously external parties can't do that for the company. So, this is where I'm seeing it from. I do see the great ones, and this is where we're at today. There's this, and the ones that are finally, giving them feedback. The next question they're asking, Oscar, who's qualified for that role? And initially, it will be people like yourself, Eric, and Andrew to do that. But I think we need to kind of understand that as the industry evolves, we can't be there for everybody. We need to start empowering and teaching this, just like investor relations was created in the industry. It became something out of nothing. And I'm not sure what we'll call it, but for now, we identified that on a post-transaction, somebody's got to build that community to help the both of you, because what are the likelihood that the company will use the regulation again?
Right, so if you have communications or you have a social media manager, they need to be trained to be able to deal with your shareholders. Because if you see on Facebook or on Twitter or something else like that something didn't go right, or someone can't find information or whatever it is, they need to be trained to be all over it, and quickly and professionally and thoroughly, and also potentially to elevate it as well. So that might be a first line of defense. But frankly, if you have your plan set up and you're doing regular communications, then probably nothing will get out of hand. And it's funny, when I think of the crowdfunding, if you go, oh, everything went wrong, then okay, now it's a mob. Or, you have crowdfunding, now it's a community. And, obviously it is more than worth it to keep them as a community, because you don't know what dividends you're going to receive from that. Customers, referrals, advocates, next raise. It just goes on and on and on. There's just no downside to it.
100% agreement. And I don't want to, one of the things that I learned in the public world was people did it because you had to. Do you guys remember when Enron collapsed, right? Everybody had to practice good governance. Where were the board of directors? So everybody's about governance, and you would talk to CEOs and board, yeah, we have to do this. And this is not a have to. This is, you need to want to do it. It changes your dynamic completely, because to Andrew's point, or Eric, the mob or the community will go out there and not only go on social media, there is another place they can go and make a difference. And I'm going to give you the bad now. That is, they can go to the service provider that you use to process that investment and get that investment back. Oh yes, or they can go to the SEC and file a complaint. So I don't want it to be that. It would be horrible if the SEC came up with a rule, as they do for others, for disclosures. Let's do it voluntarily. And that's my, when you've been given a gift, embrace it, but don't spit on it, and understand what you're getting into. So, so for the next 5 minutes, Eric, I'm going to come back to you, obviously, because you work in the public side and the privates now. So if you were to bring, now that we're getting companies, we're giving them the A to Z almost. what kind of tips would you give them? We know what you're going to do in the PR at the beginning. What are you going to tell them to do, continue to do as their journey, that they should be prepared for in their budget plan? Because this is an important element. Budgeting for the RegA and then budgeting for your business ongoing has to be part of your projections. And most of them are missing that.
Great. So I guess to answer the first part of the question, and to touch on, Andy talked a little bit about the mob and versus the community. Great description, great analogy. I think that a lot of people get very excited when they're about to launch an offering. And because of that, they go, we're going to put out press releases. We're going to be on Facebook, Instagram, Twitter, LinkedIn. We're going to have blog posts. We're going to do media outreach. And then some of those they might continue to do. They'll keep their LinkedIn active and their Twitter active. Maybe they'll keep a PR firm on to keep them in the media. But if your website gets outdated, if your blog falls far behind, if you leave 2 of your social media channels quiet for long periods of time, it's going to reflect poorly on the company. People are going to find out. There are companies out there that they've also gone through a rebrand, or they've pivoted their business model, and their website doesn't reflect the proper branding or the proper description of what they do. I think that can be, I have actually told people before, potential clients before in conversation, when they come to me and they say they want to do everything, we'll recommend, like, let's do a few things really well and then build on that, because you just don't want to, you don't want to come in, from my perspective, very expensive, because we're doing every single service possible, speaking opportunities, social media, media relations, constant press releases, monthly shareholder newsletters. Your business might take off, which is a terrific thing, but if you don't have the time to keep up with all of that demand, then, those communication points fall apart. So my first sort of imparting piece of, I don't want to say wisdom because I don't ever associate that word with myself, but would certainly be to open yourself up and do a few things well, versus opening yourself up and then having too many boxes to check off. The second thing that I would say, especially to your second question, Oscar, about post-offering, have some sort of content calendar, whether it's press releases, corporate updates, the public, especially your investors, they want to know what you're doing. You can't just, back to my original point, and yours as well, Oscar and Andy, you can't just successfully raise money and then stop telling your story. You've got to tell the business story. And I think that's where good media relations firms can really provide value, which is like, okay, let's discuss how we're going to get 6 to 8 announcements out during the year that demonstrate our corporate trajectory. Maybe milestones, technological achievements, partnerships, obviously any sort of commercial revenue, executive appointments. Continue to tell the story about your company's growth, and I think that's really going to resonate with your shareholders. So the last piece is just have an idea of not just the announcements you're going to make leading up to the offering, but how you're going to continue on from there.
Yeah. Part of what happens, I think, is the nature of the company and how it changes. You're fairly early stage when you're doing a Reg A, even if you're raising $20 million. And I'm just going to use the software analogy. You start off, you're very founder-centric, you're very development-centric, you're very technology-centric. And then you've raised your money, and now you're going to get very product-centric. And it'll be, what can we do to improve it? We're going to incrementally, we're going to have a release date every 2 weeks, every month, whatever it is. And then you eventually move to customer-centric. The problem is you need to move to customer-centric faster when you have all these shareholders, or at least that mindset, which is why you can outsource it. And I just love what Eric said about do a few things really well rather than trying to do all of it, because it takes an awful lot of energy to move a company through the cycle I just described.
Agreed. This is a topic so dear to me, and it's not half an hour, it's just never enough, because there's the tactical elements, there's how to do it, and there's the planning. I know you just touched on it really quickly there, Eric, you know, the content calendaring. And then of course, inside of it is, what are those content pieces, you know, news release, blogs and all that. But that is a lot of work. I remember when I reached out to you, I said, I need this out there. And you go, you know, Oscar, you got to slow down a bit. You got to get this done. And then eventually, and I like any other CEO, we're always hot. We got this, and we think it's got to get out there now. And obviously for different reasons. But I think the message here for everybody in this particular panel was that the same importance that you put on and the budgeting that you put in to do your RegA, you need to review your projections that you're putting towards going forward, that you include this element as part of your ongoing business. And if you need assistance with that, there's people like Eric and Andrew who have done it before for others, and how that will work to make sure that you are prepared for it, because it will catch you by surprise. It will. We know that already. We see it firsthand. Why? Because most companies use our platform to manage most of their shareholders, whether it's 30,000, 60,000, 100,000, it doesn't matter the volume, but ultimately it's a tool. You still need to have the content that Eric or Andrew help you create. So gentlemen, that was, you know, it's a great way to kind of finish off the day for all of us. And because it's been an unbelievable journey doing a RegA. If you think, you know, 8 hours was long, you know, try to imagine people like Greg Anderson, who's 2.5 years into his, or people like Ryan Bettercord, Allegiant Works, who's, you know, thought he was going live in November, then in December, January. So don't feel tired. We just get your energy back on. I want to thank everyone today for an amazing, for all the people that attended. Obviously, we recorded these sessions for you so you could watch them. They will be available only at first to all those who registered. We had over 3,600 registrations, so obviously we will get to you. If you have any questions, you can go to www.KoreSummit.io. We will be coming back. We're going to look towards your feedback, how we can make it better. The committee members right here, you know, Eric FischTank, Andrew Korn, my co-founder, Jason Futko, and then of course, Dr. Karen Garimella. Unfortunately, Sarah Hanks had to step away. She is already in demand as always. But I want to thank you all. Thank you so much for a phenomenal day. Have a great journey. We wish you all the best. We welcome you into our community, our ecosystem, to help you get through this. We will be seeing you soon. Our next KoreSummit is in the new year, 2021. Stay tuned. It'll be a lot more fun. So thank you, everyone. Have a great week.
Thank you, everyone.
Thank you, guys.
Thank you.
Take care.
Appreciate it.
Thanks, Oscar.
Bye-bye.